Hi all, today we will be sharing with you a list of 5 Vanguard ETFs that are good buys right now. These ETFs have low cost as well as low expense ratio, so everyone can easily buy them. These ETFs are for people who want to keep on investing small amount of money every week or every month for a long period of time and keep earning passive income. Vanguard provides a variety of ETFs within different business sectors as well as a combination of stocks, bonds, government securities, global markets, etc. Most of these ETFs provide quarterly dividends. So the more you invest, the more you will earn as passive income. Currently, if we see, then Vanguard has assets of more than $8 trillion. So let's get started with the first one. Our first ETF is the Vanguard Information Technology ETF. Its ticker symbol is VGT. As we can see here that it has an expense ratio of 0.1%, which is very low. This ETF was created in the year 2004. All the stocks that are included in this ETF are technology company stocks. As we all know that technology is going to have huge advancement in future, it is possible for the tech companies to grow as well. We can see large amount of profit that will be generated by this sector. And as an ETF that is hugely invested in this sector, VGT is sure to grow as well. This is the best time to buy this ETF because currently it is trading at 32% lower than this year's beginning. It will be hard to find this ETF at such a low cost anytime soon. Currently it is trading at $309.55. If we look into its past performance, it is mind-blowing. This ETF has generated a return of 614% since its inception in 2004. This means that if you had invested $10k in 2004, it will have been $60k by now. Phenomenal performance. Its 10-year returns are 372%, which is again an amazing performance. VJT has 373 stocks under its portfolio with a return on equity ratio of 39%. Having a return on equity ratio more than 20% is a good thing, but this ETF has a value double than that. VGT is primarily into tech companies, but within tech sector there are many subsectors. If we look here, then VGT has around 50% of its investment in technology hardware, storage and peripheral as well as system software. And here is the list of top holdings. Here we have top stocks like Apple, Microsoft, Nvidia, Visa, etc. All solid stocks with strong foundation. Finally, they provide quarterly dividends, but the amount is not much as compared to the stock price. The second ETF is called as Vanguard High Dividend Yield ETF. It has a ticker symbol of VYM. It has a very low expense ratio of 0.06%, which is negligible. Its current market price is $98.99. It is currently around 10% lower as compared to year beginning. VYM invests in general domestic stocks that have high dividend yield. Let's look at a return it has generated over time. Since its inception in 2006, VYM has generated a 210% return. As for 10-year period, it has produced more than 150% returns overall. VYM has 443 stocks under its banner with a return on equity of 15.1%, which is slightly at the lower end. But high dividend yield stocks generally have a low return on equity, so it is justified. This ETF has spread into many different sectors. Financial sector is the top layer with 20% portfolio holdings, followed by healthcare and consumer staples. So this is quite a good diversified portfolio. Now let's have a look at the major companies under its holding. We have Johnson & Johnson, ExxonMobil, JP Morgan, P&G, Chevron. All of these are huge giants with high dividend yields. This ETF pays good dividends. They pay quarterly dividends that add up to more than $3 per year. Our ETF number 3 is Vanguard S&P 500 ETF. It has a ticker symbol of VOO. This is Vanguard's most famous as well as people's favorite ETF. Just look at that expense ratio. It's 0.03%. It is trading at $336.08 currently and is 22% down since year beginning. A great time to buy. VOO invests in the companies that are listed under S&P 500 index, which comes under domestic general stocks. The returns since its inception in 2010 are more than 300%, and for the last 10 years it has been more than 200%. It has shown amazing growth since its foundation. VOO has 503 stocks under its bucket and they are well diversified. It has return on equity ratio of 23%, which is very good. If we look into the sectors under its portfolio, then we find IT stocks which amount to 27%, followed by healthcare and consumer discretionary. Again, the amount of diversification is perfect. The major companies under the holdings are Apple, Microsoft, Amazon, Tesla, Alphabet, Berkshire. All top tier companies that have been generating huge profits. They pay good dividends every quarter, which add up to around $6 per year. Number 4 on our list is Vanguard Consumer Staples ETF. The ticker symbol for this ETF is VDC. It has a measly expense ratio of 0.1%. It is currently trading at $177 and is down by around 10% this year. This ETF invests in consumer staple company stocks. If we look into its past performance, then it has a high return of more than 400% since its inception in 2004 and more than 140% for the past 10 years. This ETF has performed beautifully since its foundation. The number of stocks under this ETF are 100 with a return on equity of 25%, so it has good investment returns. Under consumer staple sector, there are some subsectors. VDC is usually invested into household products, hypermarkets, and packaged food products. These three together amount to more than 50% of the portfolio. The major holdings under VDC are P&G, Coca-Cola, which is Warren Buffett's one of the most favorite stock, PepsiCo, Walmart, Philip Morris. All of these are top stocks in consumer sector. This ETF provides quarterly dividends which amount to around $5 per year. So this is a good source of passive income. Our last ETF for today's video is Vanguard Total Bond Market ETF. The ticker symbol is BND. It is currently trading at $70, which is 15% lower than year beginning. This is a low reward, low risk type of ETF, as we can see that it has a risk factor of 2. So this ETF is good for safe investment. This ETF deals with only intermediate term bonds. Since its inception in 2007, it has generated a very small return of around 50%, and for the last 10 years it has been only 8%. This can be understood as this ETF focuses more on the safety rather than returns. It has a huge number of bonds under its name. The total is 10,178 bonds. If we look into the type of bonds under BND, then 67% of the bonds are of US government. This is the reason behind the low risk of this ETF. Here are the top bonds under BND. As there are a huge number of bonds under this ETF, single bonds don't get much of a weightage here. Here comes the best thing about this ETF. They pay monthly dividends. So this is a source of monthly passive income. There is a huge variety of ETFs under Vanguard with different purposes. We will surely cover them soon in further videos. Thanks a lot for watching this video. Do like and subscribe to show your support. We'll keep making more videos on earning, saving and investing money. One stop to all your money problems. See you in the next video.